So inflation is high. Should you hold cash or should you invest? And as Grant Cardone says, go broke with your investments. Keep investing the cash to where you have no more cash and then just continue to live off your cash flow. So you can see on this chart, we're having inflation. The Fed is saying it's not transitory. It's going to keep going up. Depending on who you talk to, could be 7%, could be 15%. We're not exactly sure. But what happens if there's a crash in assets, right? What happens if real estate or stocks or crypto or gold or some of these assets start to go down? It's a real concern. So how much cash should you hold? How much do you need? We're going to go over this in 3 easy steps. We're going to have a great quote at the end. Just a disclaimer, I am not your financial advisor, so make your own investment decisions. But let's jump in. All right, so cash is trash, says Robert Kiyosaki. What does he mean by that? I think a lot of cash would be awesome, right? Like living the rapper lifestyle and just having all the money, swimming in a bathtub full of money sounds pretty amazing, right? Why would he say cash is trash? Well, if you look at the benefits and the costs of holding long-term cash, it is very negative. So, back in the 60s or 50s, you can say a hamburger only costs 5 cents and now it's $5. Well, does the hamburger actually cost more, or is it simply that the value of our paper currency is worth less? And it really is the latter, right? So the dollar, it's been said, has lost 98% of its value in the last 80 to 100 years, which is really terrible. So holding cash long term, it is going to be worthless. We know this is going to happen. Not that it's going to be worthless, it's just going to be worth less and less and less over time. Like as you mentioned, inflation is 7.5%. Is it 8%? Where is it actually right now when it actually could be above 15% or right around there according to shadow stats? Some costs such as used cars have gone up 30% year over year. There's other costs such as building costs gone up 200 to 300%. Inflation is high, and no matter what the government says, it's high. It could be going higher and higher, but it feels like getting stung by a bee or a hornet. If you've ever been stung by a bee or a hornet, that's what it can feel like. You're losing the value of your purchasing power. So if you have $100K in the bank, you could be losing $7,000 to $15,000 a year. That is very painful, right? So my friend Russell Gray talks about this alternative where you take your cash, you go and you buy stuff. So you go from cash to asset to cash flow, right? So that's why Robert Kiyosaki is saying cash is trash versus if you were to go buy an asset that has some inflation hedged protection where it's generally going to rise with inflation, which not every asset does. There's some that are very volatile, and not every type of real estate or every type of business is going to have inflation protection built in. But it's important that you look at that. And the question is, how much cash do you really need? So let's jump into that. Okay, so number 2, cash is king. Wait, hold on, Bronson. What you said before that cash is trash. How can cash be trash and cash can also be king? And I want you to take a look at this because it's really interesting, okay? So in 2008, there was a crash. Obviously, we all remember it. We all remember what happened with real estate prices, the stock market, everything went down. And what happened in that time is that there were some significant discounts given, particularly in real estate. And I had friends that were buying houses, single-family houses for $30,000 in the Phoenix area that are probably worth 10 times that or more now. And you think, well, how did they get these deals? How did that actually work? Well, one of the ways they did it is they paid in cash. And so when things go down and credit tightens up, it can be very difficult to get deals. And so if you store some cash, you have some cash available, it can give you some dry powder so that if there are opportunities, you're able to take advantage of that. So that's something to really consider when it comes to investing, is that there are credit cycles. There are things where liquidity and credit is very easy, like right now, and other times where things tighten up, where having cash available can be really good. So it's balancing out, right, this thing of, cash is trash in the long term, but also having some cash available can be really good. You can see this with Warren Buffett, over $150 billion right now in cash that they're storing up for a rainy day, which is crazy. I mean, that's like just a crazy amount of money that they have in cash, just ready to be invested in any type of thing. My friends George Gammon and Rick Rule, I had them on a recent panel, and they've said that they are also storing cash so that they can be available if things do go down. They have liquidity to be able to go into the market. So that's something that I'm doing as well. I do have some some cash reserves to be able to do it. So the third thing really is, how much cash do you actually need? So what I want to say to you is, no one can tell you this, right? Unless they're your investment advisor. And if they are your investment advisor, they will be way more conservative than maybe what you feel like you should do. But nobody can really tell you this. But for me personally, I'm putting about 10% of my net worth in cash, just to be able to be available when there's an opportunity to use. I have my investable assets. I have other things that I'm doing. I have a lot I'm doing with that. But I do want to have some cash available. There's also, my friend Russell Gray talks about the precious equity strategy, where you buy physical gold from a dealer, you have it shipped to a place, a vault that will store it for you. There's a place outside of in Nevada that's called TDS Vaults. They will store the gold for you at a small fee, and then you can borrow against the gold, kind of like a HELOC. So let's say, for example, I have 100K in gold, physical gold there. I can borrow 75K at right now around 6.5%. It's interest only. It's treated like kind of like a HELOC loan. Does not affect my credit. And I can basically just use it and return it when I'm done with it. Now, the downside is if the price of gold goes down, you can potentially get a margin call and have to buy more. But I love gold, so I would want to own more gold if gold goes down, but I would also need to have some cash position to be able to do that. So the debate is, how much do you need? Do you need more cash, less cash? You're gonna have to figure that out for yourself. But I think these are some good considerations between the cash is trash or cash is king. Just something to be aware of both sides of that argument. I want to share this quote from you. It says, inflation is when you pay $15 for a $10 haircut you used to get for $5 when you had hair. And that's Sam Ewing. And boy, I can sure relate with that. I have not paid for a haircut in a while, but the haircut we get is really the haircut that comes from inflation. Every time we go to the store, we're seeing it. Everything is costing more. So be aware of that, of just how to prepare yourself both for opportunities as well as avoiding inflation. If you're interested in learning more about gold investing or putting, kind of what that conversation is, check out this video. It's Gold is Money and Nothing Else Is. You can check that out. That comes from a quote from JP Morgan that says something similar. And I wanted to ask you below, what percentage of your wealth are you putting into cash? I think it would really help our community if you put a comment below and just stick down there, what percentage or what amount of your wealth are you putting into cash? So anyway, I hope you got a lot of value of this. If you made it this far, consider subscribing. I look forward to seeing you on the next video.